And good morning. Thank you for joining us today. My name is Courtney Yaki, and I am with the F&M Regional Growth Alliance, and here today representing the Business Navigator Alliance of South Central and Southeastern Illinois. We have a great presentation in store for you. Today, we'll cover financing options through the SBA, Small Business Administration, USDA Rural Development, and the state of Illinois. To guide us through these potential opportunities, we have assembled a panel of experts, which include John Vitale and Laura Bergfield from Midland State Bank, Mary Warner from USDA Rural Development, and John D. Hill, Mark Schultz, and Diego Alcaraz from the Illinois Department of Commerce and Economic Opportunity. So what is the Business Navigator Alliance of South Central and Southeastern Illinois? Well, we are a 6-county regional collaboration working through a small business community navigator grant. The team includes Angela Griffin from Coles Together, Lori Miner from the Sullivan, Illinois Chamber and Economic Development, Risa Shaner from the Crawford County Development Association, Nora Swalls from the Marshall Area Chamber of Commerce, Bob Colvin and Freddie Schmidt from the Paris Economic Development Corporation, and myself, Courtney Yaki from the F&M Regional Growth Alliance. This group is charged with professional outreach and technical assistance for local, state, and federal programs. Our mission is to ensure that small businesses in our region are competitive and applying for necessary resources. And our goal is to position you for success by accelerating business recovery and growth. As you can see off to the side of your screen there, you can see the map of where the Business Navigator Alliance is located. Today's webinar is actually the first in a series of webinars that we intend to host each month for the first half of 2022. These webinars are scheduled to be held the last Thursday of each month, so please mark your calendars. And then you see the website there, visit ilbusinessnavigators.com. That's navigators with an S, to sign up for our newsletter and to stay informed. We also host various outreach events. We host office hours and offer one-on-one technical assistance. Again, visit the website ilbusinessnavigators.com to learn more about us, to keep up to date. We'll be posting the recording from today's presentation and have additional supportive materials on the website as well. And without further ado, we'll jump into today's presentation. Starting us out, we have John from the SBA Department for Midland State Bank, and John's going to present on 7As, or SBA 7As, 504s, and the microloan program. John, are you ready, sir?
Yes, sir. Hey, thank you. Welcome, everybody. Thanks for joining today and participating. Really appreciate it. I'm going to cover today about the various SBA loan types and provide some additional resources to help your business start and grow. I'm going to talk about the SBA 7As, the microloans, the 504 loans, and follow up with some resources and some additional information. Next slide, please. My name is John Vitale. I'm your presenter today. I am a SBA loan officer with Midland States Bank here in Illinois. And I encourage you to jot down my information. I will have this slide at the end of the presentation again, in case you miss it. And of course, Courtney on the website will have that listed as well.
Yes, sir.
Next slide, Courtney. Let's begin a little bit about why the SBA exists and who they are. So they were incepted back in the 50s, and their main function here is to really help businesses start, grow, expand, and recover. You probably heard some of them with the PPP loans, the EIDL loans, the shuttered venue grants, to name a few here recently. I would encourage you guys to visit their website, www.sba.gov. There is an enormous amount of useful. Please take advantage of it. At the end of the day, just keep in mind this is a taxpayer-funded organization and program. Next slide, please. Let's start out with the 7A loan in general. It's more of an umbrella type loan used for just an all-encompassing flexibility for the businesses. You can go up to 5 million. Certain banks have minimums. Ours is 25,000. The term depends on the use of the proceeds. It looks like we can go up to 10 years for short-term assets and up to 25 years for real estate. And it can be combined with conventional for the bank in a 504, which we'll talk about here in a little bit later. Some of the uses would be to start up a business, to purchase a business, working capital, equipment, inventory, refinancing debt, construct or lease a building, or a combination of thereof. The rates are indicative on the use of the proceeds, and the lenders will look at the credit guidelines that's set forth by the SBA, as well as some of their own institutional overlays as well. Banks are either preferred lenders, where they can make the decision without the SBA getting involved, or the non-delegated, where they will make the decision in-house and then send it off to the SBA for their approval. The preferred lenders can speed up that whole process typically by several weeks when you're dealing with them. Here at Midland, we are a preferred lender. Definitely visit the SBA website and you can see a whole list of preferred lenders out there that they chose. At the end of the day, these loans are still credit driven, meaning the banks will pull your personal credit reports and review for underwriting, as well as looking at the cash flow to determine if the business and the guarantors can afford repaying the loan. In some cases, the banks will also pull what is called a small business credit score, very similar to a personal credit score. And there's oftentimes an SBA guarantee fee that is typically rolled into the loan if for certain dollar amounts. Currently, for the fiscal year 2022, that's waived for loans of 150 or less, or for the Veterans Advantage program, 500,000 or less. Next slide, Courtney. Microloans. These are the smaller ones, as you can see, 50,000 or less. Terms no longer than 6 years, and the rates can vary depending on what lender you're dealing with. Very similar to the 7A, these can be used for an array of sources, such as working capital. Certain startups may qualify, supplies, materials, furniture, fixtures, and equipment. There are a lot of predatory lenders out there, folks, so please visit the website, sba.gov, and find the micro lender near you. These guys are vetted out through the SBA. Each one of the micro lenders may also have various underwriting guidelines, so please ask lots of questions when engaging with them. Next slide, Courtney. The 504 loans. This is more of a Cadillac program, if you will, in terms of the SBAs. These are used solely for fixed assets such as real estate, buildings, and heavy equipment. There's a couple of components working with this. So the 504s are available through what we call certified development companies, CDCs for short. These are community-based partners that are regulated and are nonprofits through the SBA. They're sprinkled throughout the country. And Courtney can help you find the local one in your backyard as well, but also provide you with some additional information here. So the 504 is a public-private partnership. What that means is the bank will do a first lien position for 50% of the loan. Those CDCs, as mentioned before, will do a second lien at 40%, and you, the borrower, bring in 10%. Again, similar maximums to the 7A. But the biggest difference is that portion through that CDC will have a fixed low interest rate for the life of the term, which is typically up to 25 years. And folks, I can tell you that in today's market, those rates are really, really low. So take advantage of that. The banks can use conventional, that's the 504 and a 7A in some cases as well. Again, visit sba.gov. It will give you a complete listing of all of those SBA lenders, all of those 504 lenders through the CDCs. In addition to that, so let's talk real briefly about some of the things the 504 can't do. So it can't be used for working capital, it cannot be used for inventory, and it cannot be used for speculation or investment in rental real estate. Next slide, Courtney. To kind of prepare you to get organized before seeing the lender, I highly recommend looping your accountant or your business attorney in to gather some of these documents as listed here. It'll make you come across as more professional, but also you will be more streamlined in the whole process. Some of the things we're looking at here or 3 years of personal federal tax returns, all schedules. We don't need the states. If you don't have the 3 years, then provide what you have and provide a narrative about the other ones. Maybe you just started last year, for example. Same for the the business as well. It's anything you're currently running. So if you have multiple businesses you're running, they're going to want to see those as well. The year-to-date profit and loss statements and balance sheets for anything you're running. Management resume, which can outline what you've done in the past and what makes you qualified to run this new business. The organizational documents you'll get from the IRS, the articles of inc, corporation docs, operating agreement, bylaws, the personal financial statement, which again can be downloaded from the SBA website, maybe any purchase contracts, lease agreements, the summary business plan, which you can get through your partners. I'll cover here shortly, as well as the projections that your partners can help you out with too. The liabilities if you have any for the business, and know your credit history. So there are, there's an option for you to look at your credit report for free at www.annualcreditreport.com. It's the only legitimate free website run by all 3 major credit reporting agencies. You can download that. If you have trouble understanding what that is, loop your banker in. He can help read that for you and kind of go through some pros and cons and benefits, pitfalls, and whatnot. The SBA website itself has a ton of these other documents you can download for free. And the bank will pull your credit, so it's best to know kind of what you're getting into before they pull it, and help maybe answer any questions ahead of time. Next slide, Courtney. So who are some of these resources? The SBA has looped in a lot of resource partners out there, and each of these are funded by your taxpayer dollars. So please, please take advantage of these guys. They'll help you with the business plan writing, the projections, and be a mentor for the life of your business. I'll cover these in detail, but just high level to get the SCORE, the SBDCs, the WBCs, the VBOX, and of course your public library. Next slide, Courtney. Let's start with SCORE. I was a former SCORE counselor and chapter chair for about a decade. I know these guys do a lot of good in your backyards. They were incepted back in the 1960s, and really they're a nonprofit, about 10,000 strong, about 250 branches across the state. No charge to you to help you with, as a mentor, bouncing ideas, having questions, workshops, seminars, one-to-one coaching, things of that nature. Their website, much like the SBA, has a plethora of knowledge out there, so I encourage you to visit it. Sign up for their webinars and newsletters, much like you are here for the Illinois Business Navigator, to know of anything else coming down the road, and again, just to have a mentor assigned to you. Again, your taxpayer dollars are funding this, so please take advantage of it. Next slide, Courtney. The Small Business Development Centers, very similar to the SCORE. They are there to help you start, grow, expand, put marketing plans together, financial projections, export assistance. The difference is these folks are typically housed out of colleges and universities in your backyard, but they do the same thing. I've done many presentations with these folks in conjunction with SCORE. They work very closely and play well in the sandbox together. Their website, again, has just a plethora of information at America's SBDC.org. Again, sign up for the newsletter, attend their events for free, get a mentor if that's something you're looking to do. Next slide, Courtney. The Women's Business Centers, again, similar to the SCOREs and the SBDCs we talked about earlier. These are sprinkled throughout the country. Although not exclusively for women, they do help level the playing field and provide some other niche services that maybe the others do not. You can find your closest women's business center at sba.gov. Keying in your zip code will kind of bring the most recent one up there. Again, I would encourage you, visit their websites, sign up for the newsletters, and request counseling and attend some of their seminars too. Next slide, Courtney. The VBOX are one of the last ones. They are really geared toward those exiting the military, or currently in the military, or their spouses, again, looking to start businesses. There's about 22 of these organizations. It's taxpayer funded. It's free for the eligible entrepreneur. Visit the SBA website again. It will list the closest one to you because sometimes they cover multiple states in this instance. Again, if you're eligible and meet the criteria set forth there, request free counseling, sign up for the newsletters and webinars and whatnot. You'll find a lot of these folks are also SCORE counselors too. So they work hand in hand and in tandem with one another. Next slide, Courtney. Although this is an SBA resource partner, it is probably the one that's most frequently overlooked. And again, that's a taxpayer-funded program. Please take advantage of it. And you can look at your libraries. Start with the local librarian. Look at what they're offering in your backyard at your city library, but also don't forget your county libraries too. And in most cases, you can even apply for membership based on where you work, or maybe paying a small nominal fee to become a member of a different one that may offer some additional resources not available in your backyard. Again, it's taxpayer funded. Take advantage of it. Next slide there, Courtney. I always like this slide because if 2020 taught us anything, is that you need to have a relationship with your business financial team. Assemble them early. It could be your banker, an attorney, an accountant or CPA, an insurance agent, the mentors, which we talked about earlier, their scores, the SBDCs, the VBOX, the women's business centers, maybe even a realtor if you're looking to buy or lease a business as well. But I do encourage you to have one-on-one regulars with this team, so they all know where you've came from, where you're at, and ultimately where you want to be. Great mentors themselves as well. Next slide, Courtney. No question's a dumb question. Please feel free to reach out to me, to anyone else on this webinar, to Courtney, to those folks out there that I mentioned earlier for the mentors. It takes a village to start and grow a business. It really does. And just know you're never, ever alone on that journey. Use all the resources at your fingertips. Next slide, Courtney. Again, my name is John Vitale. It's an honor to be with you folks today. If there's anything I can be a resource with, please feel free to reach out. There's my contact information. Courtney will have it for you as well as the website. Thank you again, and good luck in your journey.
Awesome presentation, John. Lots of good info, not just on the opportunities, but resources out there and what to start doing to prep. Great information. If you have questions, please throw them in the chat. We're going to save questions to the end after all three presentations, but by all means, throw your questions in the chat, get them in there sooner or later. We're going to try to get to everybody. But next up, we have Mary from the U.S. Department of Agriculture, the Office of Rural Development. Mary, are you ready to present?
I am. Thank you, Courtney, for the invitation to present today. I am the Business Programs Director for Rural Development in Illinois, and there are two other folks on my staff, Matt Harris, who sits in Peoria, and Kelly Hydrater, who sits in Champaign. So we are small, but mighty, I suppose. We were able last year, I think we got over $50 million out on the Illinois street, so we do the best we can to keep business moving along. So next slide, please, Courtney. The first program that I'm going to speak about is really our flagship program, our business and industry loan guarantee. It's very similar to the Small Business Administration program that John just spoke of. Same concept. We offer loan guarantees, lenders who provide loans to businesses in their rural areas. And our rural definition is population of 50,000 or less is where we do our business. We can sometimes go into more urban areas if it's a food project. But, and then if you're in and around Champaign, as an example, Champaign-Urbana is ineligible. And even though Savoy is less than 50,000 because of its proximity to Champaign-Urbana, it is also ineligible. So if you're ever in the Metro East area or around Bloomington and those areas, it's always best to look at our map, our eligibility map. So funds can be used for a multitude of things: improve, develop, new, existing, working capital. It's really about creating and saving jobs in the rural area and providing access to capital for those businesses to stimulate the economy. The maximum loan amount is $25 million per borrower. And then they recently changed back in October 2020, they revamped our program a little bit, and the guarantee percentage used to tier down the higher dollar amount, but now it's a flat 80% guarantee on any dollar amount. So a $25 million loan is guaranteed at 80%, and $1 million loan is also guaranteed at 80%, which really reduces the bank's exposure on the loan. And it also, one of the bigger benefits is it frees up the bank to loan more dollars, since the guaranteed percentage doesn't count against their legal lending limit. So Courtney, next slide, please.
And Mary, is a little choppy on your auto. If you
Okay.
could, towards the end there, it started coming in a lot clearer. If whatever you do, keep it up. Maybe just a
Okay.
little louder too, please.
Okay, I can do that. I have some examples in my slides of projects that we've done. This is Foyt's Contractors located there in Paris. We helped them with refinancing their debt, and then they also added some working capital. As you can see, they're a construction company that they've done some projects in the Champaign-Urbana area, bridges. That one's across a railroad, but they do interstate projects as well. Next slide, please. Orthotech Sports, this is a neat one down in Heron. They actually are, well, they sell exercise equipment too, but the really neat thing that they've done is the owners patented a self-leveling mechanism to put inside their dumbbells. So if you go to the gym, every night, the employees at the gym realign the dumbbells so they're all, perfectly placed and look neat and tidy. Well, what they did was they invented this mechanism they put in there, and these dumbbells now self-level, and they have clients all over the country and even overseas as well. Universities, professional teams, they're really a neat organization, and we work to refinance their debt, and it really helps with cash flow. Next slide. The next program that I'm going to talk about, many of you are probably familiar with the grant side of it. It's the Rural Energy for America program. There is also a loan guarantee along with the grant. The loan guarantee is 80% guarantee, also 25 million maximum. The grant is essentially probably the most utilized program in our highest volume program in our state, I should say. We receive about 150 to 200 grant requests a year, and it's to finance the purchase and install renewable energy systems, and then take energy efficiency improvements for existing equipment that ag producers and rural small businesses are replacing. The deadline for grants is upcoming, it's March 31st. And then if you are going to apply as a grant and a loan guarantee, it's also March 31st. If it is just a loan guarantee, we can accept them all year long. Courtney, would you move to the next slide, please?
Yeah, and Mary, it's still kind of in and out and real soft.
Okay,
Can we, how about we advance, go to DCEO, have them present, and then I'll come back to you and you
Sure.
call in and
Yeah,
see if that's a
can do
little
that.
clear.
Yep.
Awesome. Sorry, everybody, for attending. Sometimes internet connections are not the best, as we know in rural USA, but I'm going to go ahead and advance. John, Mark, and Diego, are you gentlemen ready?
Yeah, we're ready to go here. Can you hear me okay?
Can hear you just fine. All right.
Perfect.
So
Perfect.
go ahead.
All right. Well, thank you, Courtney. We appreciate the opportunity to speak to everyone today. We have on the phone with us Mark Schultz, Diego Alcaraz, and myself, John Hill. We're the Advantage Illinois team for Department of Commerce and Economic Opportunity. So if you go to the next slide, please. So what is Advantage Illinois? Advantage Illinois is a participating loan program that helps businesses or small businesses get access to term financing, and it helps get them at a lower rate than what they would traditionally be able to do. It consists of us purchasing a portion of the loan from the bank. So that means that our portion that we have, that we purchase from the bank is subordinate to the bank, so it lowers the risk to the bank. So they're more willing to participate and to give out loans to these smaller businesses. And the overall goal of Advantage Illinois is to help grow and expand businesses in the state with the ultimate goal of creating new jobs and retaining jobs here in the state of Illinois. So, all right, Courtney, if you'd like to go to the next slide, please. Okay, so how exactly does it work is we help fill in the gaps where businesses are having shortfalls when they go to a lender. What we do is we help out if they have collateral equity shortfalls. For example, we had a business that we're working with right now. They're trying to purchase the business, and they don't have the equity to be able to get a regular term loan from a bank. So they're using Advantage Illinois to come in, and our portion that we participate at would be considered equity in that, since we're subordinate to them. So or to the lending institution. So that helps out by lowering the risk to the lender by us providing our portion of that. Also, to the historical cash flows, or lack of historical cash flows. With most startups, they don't have a financial history, as where a commercial lender is going to request that you have. Most of the time, they're going to ask for 2 years of financial history before they even entertain the idea of providing a loan for a startup. That's where we can come in and we can help by doing a subordinated position with a bank to help offset that due to their lack of historical credit cash flows. Also, too, low credit scores. What we're seeing right now is a lot of small businesses are having problems coming out of the COVID as they've been relying heavily on their lines of credit. At times, they may not have the cash flow to be able to make their monthly payments, so it's been hurting their cash, or hurting their credit scores, and they're having a hard time getting access to capital so they can help purchase inventory or pay wages, or just general financing needs that they have. Also, too, negative net worth. We're seeing a lot of individuals that come out of school, either undergrad or graduate school, and they have a significant amount of student loan debt, which causes them to have a negative net worth. However, that's where Advantage Illinois can come in and we help out with that. We'll step in and we'll take a subordinated position with the bank and participate in that to help out. So what can the loan be used for in Advantage Illinois? Basically, it's anything that's business related. You can do, as mentioned before with the 504, we also do real estate. However, it's got to be 51% or more owner occupied. You need to go in and you can't just go in and purchase real estate as an investment to be doing that. We had a business that they went in and they actually purchased a strip mall, even though the strip mall would be considered hello, is everyone there?
Yes, we can hear
Do
you.
you guys hear? Okay,
Yes.
I'm sorry, my computer just went off. So welcome to technology. But we had a business where they were working out of a strip mall, and they were wanting to expand. And with their expansion in that strip mall, they would be occupying 60% of that strip mall. So they were eligible to use that for Advantage Illinois, as they were above 51% owner occupied. And then they were able to rent out the other 40% of that strip mall, to help cover their payments on that. Also, too, it can be used for inventory, working capital, equipment, leaseholder improvements. We've been seeing a lot of leasehold improvements as we're seeing restaurants and bars try to do outside dining, due to new COVID requirements. So they'll go through and they'll set up an area for people to be able to come to their location, but be able to sit outside. So we're seeing that. Also, too, it can be used to cover their accounts receivable on that. One thing that I would like to bring up on the equipment side of it, we are flexible with how we can set up our how we structure our loans, and we see a lot. We do work with other programs, so what we'll find out is we'll have someone will come in and use an SBA loan to purchase their property or their facility, and then they'll come in and they'll use Advantage Illinois to purchase equipment, inventory, or working capital. So that really helps out the fact that they can pair those together with other programs and use Advantage Illinois to help them out as well. Now, we do allow refinancing, but it does have to be with an unrelated lender. So you can't refinance through your same lender. You'd have to go through a new lender. Also, too, we require that there's due financing that's included with the refinancing. It doesn't have to be a whole lot. In fact, last year we had a business that went through and refinanced their location, and they did the refinance, and then they added in an additional $10,000 to the refinancing so they could re-rock their parking lot. So it doesn't have to be anything big. They just need to have some sort of new refinancing on it. And then also, too, as I mentioned before, the whole goal is to create jobs or retain jobs. So there needs to be new job creation or retention, with a refinancing of a loan. So, okay, Courtney, go ahead and go to the next slide, please. Okay. So what are the benefits? So for a borrower, what we do is we help them get access to their to this financing that they generally wouldn't be able to. And also we go in and we provide a lower rate. I'll go through that here in a little bit, but what was it about the rates here a little bit later on, but our rates are significantly lower than what the bank rate's going to be to try to help out and provide more cash flow for the business. From a lender standpoint, what we do is we provide help them provide more loan volume because we lower some of their ratios. And also we take risk off of them with our position being subordinate to the lender. In the case of a default, the lender would get paid out first, and then we would get paid out second on that end. So, we help out with that. Also, too, the other thing is we help build relationships. You may have a commercial lender that really wants to work with a business, but unfortunately it doesn't quite fit in with what their program requires. But if they add in Advantage Illinois, it helps provide that a little bit of support they needed to get them through their beginning phases of their business or their struggling times that they were going through, and then helps build a lasting relationship that they'll have a good working relationship with the business and the lender going forward. Now, from our standpoint, from Advantage Illinois, what we're doing is our benefit is we're trying to help create jobs. The whole thing is to create jobs and retain jobs in the state of Illinois for that. So some of the important information here, Advantage Illinois, as I mentioned, we're subordinate to the bank. If there was happened to be a default, we would get paid out second. The bank would take it would make sure they get paid first. Also, too, the banks service the loan for us, so they receive their payments first, each monthly payment first, and then they pay us behind the scene. So that way, they're guaranteed to get paid up front as well. There are no fees to use our program. We don't charge a fee to the borrower or to the lender to use it. Like I said, our whole goal is to create new jobs, to retain new jobs in Illinois. So we don't charge any fees on there. We have no application. The Advantage Illinois, with it being a participating loan program, What we do is we rely on the bank to go through and do their underwriting. And then once they're done with their underwriting process and they have determined that they're willing to close on the loan contingent upon approval by Advantage Illinois, then they send it to us for our underwriting and for our review. If we have more questions, we'll reach out to the lender to let them know. But that really helps out the fact that they don't have to file multiple applications to come in and be part of the program. So the only form that we do have them fill out is called an ITR-1, which is a form that we'll send over to Department of Revenue to verify that there are no back taxes owed, because we can't participate in the loan if there's back taxes owed. But we do that once we receive the original application from the borrower. So next slide, please, Courtney.
And real quick, so this program, do you work directly with the borrower or do you work with the lender?
So we work with the borrowers to help get them in contact to make sure that they're ready to do a loan, but we work directly with the lender when it comes to the actual loan portion of it. So the borrower will actually go to the lender. We'll provide a list of the approved lenders that we have. If their lender is not on that list, we'll work with their lender to get them approved and get them on the list. They'll go through and do their full loan application, and then the lender sends everything to us for us to do our loan write-up.
And can you quickly detail what is that process for a lender to get signed up?
Yeah, it's really quick for a lender to get signed up. They just reach out to us. We'll send you over some forms. You fill them out, send them back to us. We take it to our committee for approval, and barring anything really negative against the lender, they should get approved. So I've never seen one get denied in my time of being here. And we've gone from 20 lenders to 60 plus lenders. So yeah.
Awesome. Awesome. Thank you.
Yeah. Good questions. Thanks, Courtney. So there are some things that we can't work with. That's not for profits. It's got to be a for-profit entity. Not for profits. There's other areas that we can send people to get them help and assistance. Cannabis. I know a lot of people come to us about cannabis. Our program was originally funded through the SSBCI, the State Small Business Credit Initiative of the Small Business Jobs Act of 2010 from the federal government. So with the majority of our approved lenders being FDIC insured, we're unable to participate in a cannabis related program. However, there's other programs within DCO that will help out with that. Investment real estate, as I mentioned earlier, it's got to be 51% or more to be able to do real estate. Anything to do with tobacco, goodwill related change in ownership. So we can still work. If you're buying a business, we can still use Advantage Illinois. It's just that you would not be able to add in the goodwill. That would need to be covered out of the owner's equity when they put that in on there. Anything to do with adult entertainment or anyone that's had a bankruptcy judgment or lien in the past 5 years. So those are all no-goes for us. If we see any of those, we politely say we'll pass. So, okay, Courtney, if you go on to the next slide, please. So here is the amounts that we can participate at. We have two programs in Advantage Illinois. We have our standard Advantage Illinois, which is open for any businesses in the state of Illinois. The amount that we can participate at is the lesser of these three, which is 25% of the project, 50% of the loan, or 1.5 million. Our maximum term is 10 years. Now you can't amortize it for longer than 10 years, but we ask at the end of the 10 years that there be a balloon payment to cover the remaining principal on our portion of the loan. Yes, you can amortize. And then the other thing is our rate is fixed, is 2% below what the rate, the bank's rate is. So we piggyback off of what the bank does. And we're at 2% below theirs. So if they're at 6%, we're at 4%. If the bank floats, we'll float right along with them. However, we do have a floor of 2%. Reason I put that in there, the floor being 2%, is we've had some loans come here through recently that have been around 3.5, 3 3/4. So we can't go below our 4%. And then finally, what we ask is for every $50,000 we participate in, that one full-time job be created or retained in the state of Illinois in the next 2 years. Now, the next portion is called FAME, which stands for the Fund for the Advancement of Minority Enterprises. This has become a very popular program. We actually did roughly 83% of all of our projects last year were FAME projects. What it is as long as the business is 51% or more owned by minority, is woman owned, veteran owned, or disabled owned, it qualifies for FAME. Way we can participate is the lesser of either 50% of the project or 50% of the loan up to $400,000. Typically these loans have a tendency to be a little bit smaller. That's where the lower portion of that comes in. Normally we see these loans anywhere from $100,000 to $300,000 is normally right around where they're at on that one. Our maximum term that we can do is 7 years, but as mentioned before, we can amortize. It just needs to have a balloon payment at the end of the 7 years. The big selling point on this one, though, for the FAME portion is our rate is 2% fixed. So, if you do a blended rate of say a bank comes in at 8% and we're at 2% and we're doing a 50-50 split on it, that lowers their overall rate. It gives them a blended rate of 5%. And then for each job, for the job creation, what we ask is for every $65,000 we're participated in, that one full-time job be created or retained in the next 2 years. So, all right, Courtney, if you go on to the next slide. And this is just our contact information that we have here. Also, too, the slides that we'll be providing, that Courtney will be providing, have a little more detail in it. We were trying to cut back on our deck a little bit for time constraints, but he'll be sending out a one-pager that gives a high overview, and then also a deck of slides that has a little bit more detail in it. So, and if you have any questions, please reach out to Mark, Diego, or myself. All of us can answer questions. All of us can help out. We're here to help you. So.
Awesome. Thank you, John.
Thank
you. Great presentation. Great opportunity for a business to partner with the state of Illinois to try to expand their existing business or grow something new. And again, I would encourage you, please put your questions in the chat. We're going to go back to Mary for USDA Rural Development. And then after her presentation, we will have a Q&A where we can address all your questions, but please throw them in the chat. Mary, are you there?
I sure hope so. Is that better?
Yes, we can hear you. Okay. Awesome. So we had stopped, I believe, on slide 24.
Yeah, and if you want me to go over the first slide again, if the sound wasn't good, I most certainly can. I will, and I can skip over the project. But if you want to go over the details, I'll leave that up to you.
Real quick, yes, let's review.
Okay, all right. As I was saying earlier, the B&I program is very similar to the SBA programs. One key difference that I failed to mention is that the refinancing of projects is a little looser with B&I. So if you have a good refinance project, we can most certainly make that work under B&I fairly well. We can refinance 100% of new debt to a bank. We can refinance 100% of government guaranteed debt already on the bank's books. And we can also refinance we can refinance current lender debt as long as you're adding 50% new debt. So I wanted to point that out. Maximum loan amount is $25 million with an 80% guarantee no matter the loan size. Courtney, I'll let you go ahead and skip to the energy programs if you want.
Awesome.
So the Rural Energy for America program, it has a grant component and it has a loan guarantee component. And then you can also combine it to have a combination application. It's essentially used to purchase renewable energy systems and to make energy efficiency improvements for ag producers and rural small businesses. And just in case it was unclear, the first go around, 50,000 population or less is our population threshold that we abide by. The upcoming deadline for grants only is March the 31st. And if you're going to do a combination application of a loan guarantee and a grant, that is also March 31st. Otherwise, a loan guarantee only, we can accept those year round. Next slide, please. The grant can be no more than 25% of the eligible project costs. The thresholds are different depending upon what type of project you're doing. For renewable energy systems, the maximum we can go up to is $500,000. For an EEI project, an energy efficiency improvement project, it's $250,000. Full disclosure, the grant funds are not that lucrative, unfortunately. Most of the grants the grant requests we receive are somewhere between $20,000 and $40,000, usually more hovering the $20,000 range. And then I see a typo now in my screen, but the minimum, that's not right on the minimum grant. There is, I believe, a $5,000 minimum for renewable energy systems, or $2,500 for renewable energy systems, and for EEI it's $1,500. Please bear with me. I am by no means the program expert on REAP anymore. And then the maximum loan amount is the same as the B&I program. We can go up to $25 million on a loan guarantee. Next slide, please. Here's some examples that we've done in the last fiscal year or two. This is a Ford Lincoln dealership up in Peru. They replaced all their exterior lighting, and that was a great example of an EEI project that we don't do very often. They swapped out their old school lights and put in LEDs. Next slide. This is a car wash in Fairbury. They installed solar on their roof to power the facility. And then I've also done another project in the past, south of Danville. They did a solar project, 2 of them for a car wash. They did solar PV and solar thermal for the water. Next slide. This is a large, 2 separate projects that we have done in Arcola, Donato Solar 1 and 2. These were loan guarantees. No grant was involved, and I believe each project was 3 to 4 megawatts, and the power that they are using is being sold to a facility right there on site that is mining Bitcoin. So they're using all this energy to mine Bitcoin, which is above my expertise. I have minimal knowledge on Bitcoin, but it sounds like a pretty interesting project. Next slide. Red Leg, the Rural Economic Development Loan and Grant Program. This is one of my favorite programs. It's a 0% loan, and it's a pass-through loan. It's the intermediaries that are eligible are electric co-ops, telephone co-ops, and then also municipalities that distribute electric to their citizens can become eligible for this program. Right now, the maximum loan amount is $1.5 million. It fluctuates each fiscal year depending upon the demand of the previous fiscal year. So they had some leftover money, so they upped the maximum for fiscal year 2022. And then the maximum grant is $300,000, and that is a grant to the intermediary, and then they relend that money out. And as that money is paid back to the eligible intermediary, a revolving loan fund is started. Next slide, please, Courtney. I should mention too, it's a 10-year term at 0% on those loans. So while the interest rate is very obviously null, sometimes that payback in the term is a little short, so it stretches the cash flow thin. So sometimes conventional financing is a better route for borrowers so they can term it out. But the 0% gets a lot of interest for sure. The city of Geneseo was the very first municipality in Illinois to become eligible for the program, and they lent $1 million to Hammond Henry Hospital there in Geneseo to expand their facility. The city of Flora recently became an eligible entity, and they started a revolving loan fund here in town. Next slide, please. Clay Electric, located where I sit currently here in Flora, they applied for a $1 million loan to relend to Wabash Telephone in Louisville to build a new headquarters attached to their existing warehouse. So Wabash Telephone received a $1 million loan for 0% for 10 years to upgrade. Their old facility was on the square and it wasn't ADA compliant, and they really needed this new structure. And I think their employers or their employment numbers had doubled or tripled, so they were out of room. So this was a a good project that we were all excited to be a part of. Next slide. Egyptian Electric down in Murfreesboro, they applied for money to relend to the Southern Illinois Airport there in Murfreesboro to build another hangar there at their current facility, which is also where the SIUC has their aviation program. Next slide. The Rural Business Development Grant, I will note as the last bullet, just as a heads up, the deadline is February the 28th. So depending upon what county you're located, if you want to know what area office that you need to get in contact with, please feel free to reach out to me after this, and we can get started on that. It's a grant program, and the grant program is for nonprofits, public bodies, and institutions of higher education to receive the grant, and then they're to use this money to help assist and develop, expand small and emerging private businesses in rural Illinois. And as I mentioned, the deadline is February the 28th, and we all know how quickly time goes, so it will be here before we know it. We do have a revolving loan fund component that can be applied for under this, but just note that the grant funds cannot be passed directly to the small business. They have to be lent to the small business. Next slide. This is an old example, but I still like to use it every year. This is the city of Elmwood. They've actually received 2 rural business development grants. The first one, they had a tornado come through, so the city applied for a revolving loan fund to help their local business owners get started on rebuilding the town back. And then later, the city came back and applied for what we would call a streetscape project to improve the downtown area, make it more appealing for people to come down. Next slide. This is up north, Morrison Institute of Technology. They applied for and received a RBDG to purchase some of these machines, CNC machines there in their facility. And what they're using these for is, it's twofold. They're using it for job training there at their institute, but then they're also allowing local businesses that need these machines to come in and rent them to use for their product. Next slide. The Value Added Producer Grant, that's a popular program, and it is for ag producers to do feasibility studies, planning grants, and also to apply for working capital. And that is in order to make the product that they're growing or raising, turn it into a value-added product. So I'll have some examples, but grapes to wine, milk to cheese, those are some common ones that we receive grant applications on. Courtney, next slide. This is Rustic Road Farm up north, and this gentleman, he's actually, he was a part of the Let Us Entertain You restaurants there in the Chicagoland area, but he's got his own farm out in Elburn, and he makes soup. They raise pigs, all kinds of produce and animals, and they're turning them into food for us. So they received this grant a few years back. Next slide. This is Stumpy Spirits over in Columbia. I don't know if any of you have been over there, but I've been over there once just to do a site visit. And it's a neat facility, and Adam is his name. He's making different whiskey, different vodka, all kinds of interesting things that he's got going on over there. And what he's growing the crop, and then he's distilling and turning it into bourbon. So that's why he received a grant for working capital expenses on this project. Next slide. Here's another example. Greta's goat milk. She raises goats and uses that milk for cheese and soaps. Next slide. I've got 2 more programs to quickly talk about. These would be relevant to public bodies and nonprofits. They're revolving loan funds. The first one is the intermediary relending program. So one of the eligible entities applies to the USDA for a loan. This one is a 1% loan over 30 years. And it's a revolving loan fund to help businesses in the service area, and just allows them to have access to capital if they can't get it elsewhere, or if they want to partner with banks. We can use the IRP funds as a participation lender, essentially, with a bank too. So there are probably 10 to 15 of these funds around the state. We have a map that if anybody's curious about, we can send that out. There are a lot of dollars out on the street for this program. Next slide, please. Champaign County Regional Planning Commission, they applied for back in 2012 for these funds, and they are used, if anyone ever drives 57 and has been through Rantoul lately, they've put up a new hotel in the last 2 to 3 years, and they use these IRP funds to assist in the construction of this hotel. Next slide. RMAP, the Rural Micro Entrepreneur Assistance Program, that is essentially the same type of product as the IRP program. The biggest difference here is that we're focused on micro businesses and micro entrepreneurs. So that ultimate recipient has to be 10 or fewer employees. So they're considered micro. And then the terms are a little bit different on this one. RMAP is a 2% loan to that intermediary for 20 years. Again, nonprofit corporations and institutions of higher education are the eligible, our eligible borrowers on this program. Next slide. Southern Illinois Coal Belt Champion Community, they're probably our biggest revolving loan fund borrower in this state. They're based out of DuQuoin, the DuQuoin area. They participate in RMAP. They also participate in IRP. And then they do also have a revolving loan fund through RBDG too. So they have a lot of funds there available to be relent. This is an example of a project that they did for Wes Rogers Tire and Auto. They helped him construct that facility there with these funds. So next slide, and I believe I might be done. So again, my apologies for the sound issues, but there's my contact information. Feel free to reach out if you have any questions.
Great presentation, Mary. Thank you very much. And what are we if not adaptable? So much appreciate you putting on pause, calling in and regrouping yourself and getting right back into it. Lots of wonderful info. We're coming up on the hour. I do want to say thank you for those that attended today. We're going to enter into a Q&A session here. By all means, this is being recorded. Please stick around, stay with us, ask your questions. We'll try to get to everybody. We'll put a hard stop at noon, but the recording will be on the website too. So the first question I'm going to get to, I had one that was directly sent to me, and I'll jump into the chat as well, but it goes to the panel as a whole. So we'll just go through each presenter, and it's a two-part question. One was, will I have to provide financial information or proprietary information to apply for these programs? And the second part is, how is my financial information kept confidential? So John Vitale, if you want to start us out.
Yes, sorry, take off mute and whatnot. So first part of the question was, will you have to provide financial information? Correct, Courtney? Did I miss
Yes,
anything?
sir. Or proprietary information as well. So do we have to provide financial information, proprietary information? And if so, with assumption to sue, how is that kept confidential?
Got it. Yeah. So for any bank, yes, you will have to provide complete financials, any and all documentation around the product or service you're offering. In terms of confidentiality, it is kept in a secure encrypted information within the bank. We do not share it with third parties.
And Mary, for the USDA Rural Development programs?
My response is the same as John's. We would require financial information and possibly some proprietary information, but it stays within rural development. It stays in a secure location.
And John Hill, Mr. Hill, same question, please.
I agree with both John and Mary on that one, and everything is kept confidential with us. The only thing that I would like to bring up is even though some of our documents are foilable, The loan documentations are not anything that has to do any proprietary information, any financial information or anything like that, or anything related to the borrower is not FOIAble. The only thing that we allow to go out would be the name of the business that we participated in and the amount that we participated in the loan.
So thank you for explaining that as well, especially with the FOIA request, and maybe to continue that on. Mary, or is information subject to FOIA for USDA Rural Development?
It is, and we don't get FOIA requests very often at all. We did actually get one recently, and it gets sent to national office, and usually that specific proprietary information is not shared. However, it's not up to me either. They tell me what to share, but yeah, that's usually not an issue.
And John, with SBA?
Yeah, anything like that would definitely go to corporate, and it would be whatever the attorneys in corporate says. So I would echo the same as the other ones.
Thank you, sir. Thank you. And then from the chat, Angela had a question earlier for the Advantage Illinois team. Is there any documentation of retention needed for the Advantage Illinois loan? And I see you answered it in chat, but I think it's a good thing to bring up in that this chat will not be here during the recording. So John Hill.
Yes, could you run that question by me again one more time?
Is there any documentation of retention? So the retention of employees needed for the Advantage Illinois loans?
Yeah, no, sorry, I was trying to just say, he's trying to figure out.
No worries.
Up on me. So, yeah, no, what we do is we just ask that anything on the retention of the job creation be added into the loan write-up that we receive from the lender. What we'll do is we'll go through and look at it, and as long as it looks reasonable, we're generally not going to have any issues with it. If a business comes in and they say that they're going to create 3 jobs and we participated, $120,000 or something like that, and then they come back and say, hey, we were only able to create 2 jobs, that's fine. We understand things happen. On the flip side of that, we may have a business that comes in and says they're going to create 2 jobs and they end up creating 6. So, it's one of those things that we understand that happens. The only time that normally throws up a flag is say if someone comes in and they request $1 million participation and they say they're creating 1 job, that's probably going to throw up some flags, and we'll probably question that before we participate. But if it's close, we're good to go with it. We'll work with people.
Awesome. Well, continuing on with the that topic right there with the Advantage Illinois program, if the business owner was not taking an income from the business, would the owner taking income under the loan be considered job creation?
Hey,
So
Courtney, this is Mark Schultz.
Yes, Mark.
But
Please.
yes, the owner could be counted as either like keeping their own job, or if they're buying the business, they would be creating a new one. So yes, they could be counted.
Awesome. And then Mary, the next one's for you, the value add producer grant. Can a value add producer grant be used for a farm to table restaurant, or is it only for food sold at retail?
There's no restriction that says it's limited to food sold by retail. Would depend upon a few other things. I'm happy, is that from Lauren, to send some specific information. You
Yes.
have to, there's a 50% threshold to growing it and what you're selling. That one was going to be tricky. So that's going to be more of a, we need to probably talk offline
On a case by case basis for something like that.
Yeah. VAPG is a very complex, very, very complex program. So that one can't be answered very quickly.
So would it be fair to say, willingness to explore it and try to assist where possible, and just want to make sure that that's the right program that's applicable for the project, and if not that program, maybe something else.
For sure. But there is definitely no restriction to food being sold retail only.
And then the next question was about non-for-profits and whether they can apply. And I know, Mr. Hill, that you had noted in the Advantage Illinois that non-for-profits are not eligible. I believe that's correct. Mary, is there a limitation to non-for-profits for USDA Rural Development programs?
Depends on the program.
Depends.
Typically, they are eligible. REAP, they are not eligible. The energy program that I spoke of. BNI, we can do nonprofit entities. And all the other programs, nonprofits are also eligible. Red Leg, I was specific on the 3 eligible entities, which they are technically nonprofits, so, and public bodies. So just REAP is the only one that cannot, that I spoke of.
Understood. And John, for SBA?
Nonprofits are not eligible.
Thank you. Thank you, sir. And John, to continue with you, this question would be to the panel as a whole. We'll go one by one. What is the turnaround time from application submittal to either approval or possible denial?
Well, that is definitely an open-ended question, Gordon. And I would say it's going to depend on the borrower, because the banks are going to require very specific information, and as quickly as we can get that in, the quicker we can get a full packet and therefore send to underwriting.
So by all means,
I've seen it as move as quickly as 2 weeks, 2 months or longer. It just, again, that's a very difficult one to answer, and it's going to be how aggressive is the borrower at getting us the information needed on a timely manner.
Understood. And working with the local bank and the financial institution that they're working through, and what your intentions are, not to hold up a project, but definitely kind of at the mercy of how quick somebody can work.
Correct. And keep in mind, we require that business plan with projections, and sometimes it takes a little bit longer to put together if you're starting from scratch, right? So
Yeah.
Working with those mentors, some of which are volunteers, that might take a little bit longer to muddle through that before you get that part done, which is step 1, then being able to do the paperwork step 2, right?
And I think it'd be appropriate to say it's the journey, not a race.
Correct.
Yes.
Very well said. I'm going to quote you on that. I'm going to steal that quote.
There we go. And Mary, for the USDA Rural Development programs, anything that you want to add, anything specific for turnaround times?
Yes, for the BNI program, our internal threshold 30 days with a complete application. So much like John said, that really is, in our situation, it depends on the lender and the borrower. REAP, on the grant side, we are bound by those application deadlines that we have, so we have to wait until they pass. And all the other programs that I mentioned, minus the upcoming RBDG, all the other 3 programs are quarterly competitions, and then RBDG has that deadline. So usually in April, May, June, we find out who's funded. So they're all different.
All different. And John, Mark, or Diego, anything to add towards the typical turnaround time for Advantage Illinois?
Yeah, I would just say, like they've mentioned previously, it depends on which lender the borrower is using. But as far as internally to DCO, we shoot to have them done within a month. The caveat is the ITR-1 form is the one form for tax clearance that we have to send to the Department of Revenue. They request up to 2 weeks to get that back. Recently, they've been much quicker, but that's the only thing that kind of goes out of house that gets taken out of our control. But yeah, we shoot for within 30 days.
Awesome. Thank you. Mary, this one's to you for the BNI loan guarantees. Can you explain how that works for a sole proprietor and like an LLC?
Yes, I can. So in either case, they would go to their lender of choice. If it's a regulated lender, there's no approval process or anything. We would give the lender our guidelines and checklists on the items needed, and then the borrower works with the lender to get all the required items together. The lender does their normal credit underwriting, sends us their packet of information. We review their credit memo, look over their financials, and then do our own loan committee, approve it or deny it. Usually if it's made it to loan committee, it's going to be approved. And then we send out some information to the lender and work towards getting that loan note guarantee issued on that loan.
Thank you. And John, for SBA loans, the question was, would Midland State Bank be the best place for a business to start, or for a business owner to start to access all these possible programs, or what's the best place to start?
Yeah, I mean, so I would more than be willing to help you walk through the transition and make the referrals to the partners on here if that makes sense as well.
Thank you, sir. Thank you. A question about the recording. So the recording will be made available on our website, that ilbusinessnavigators.com. A follow-up, all those that had registered, we'll send out copies of these PowerPoint presentations, a link to that recording, and then also any of the supplementary materials that have been provided by the presenters. And John, a quick question, and maybe this might get into a little too much, but the difference between a 7A, a 504, and microloans, sometimes they can kind of merge together. It's a little harder to understand. Are you able to do a quick high level 7A is this, 504 is this, microloans this, or where can they find that more information about this? What's a good resource?
Yeah, the SBA website directly would be a great resource for that, because they do break them down individually like that. But just real high level, the 504 strictly is for commercial real estate and equipment. The 7A is really an umbrella. You can use it for everything. And the microloans are for those smaller ones, 50,000 or less.
Awesome. Great answer. Very good info. And then if you have topics that you'd like to listen to, I had a question about submitting for the upcoming webinars. We are hosting these each month. The last Thursday of the month, we do have a little agenda that we're working towards. But if you have an idea or something that you would like to learn more about, please submit them to us. The contact information I'll throw back up on the screen for each of the members for the Illinois Business Navigators Alliance, or jump on our website. We have a form where you can ask questions and you can submit info there as well. John, to you, I think you had mentioned about checking your credit score and through a resource for a free credit report.
Mm-hmm.
Will that credit report affect that credit score?
It will not. It does not count as a hard inquiry. Excellent question, by the way.
And can you note where that resource was real quick?
Yep, that's 3Ws.annualcreditreport.com. So all one word, no spaces or dashes. Annualcreditreport.com.
Annual credit report. Thank you, sir. Thank you. And the last question I think I have here, check the chat, is to Mary. My electric services are through Ameren. This is for the Red Leg Rural Economic Development Loan and Grant Program. Can they still apply?
Yes, they can. Ameren is not eligible. However, it is not a requirement that you be on a co-op's lines.
Awesome.
Or be a member.
And I will ask, I have the team members for the Business Navigator Alliance on the webinar today. Does anybody have any additional questions or something they would like to share? You can see our contact information here and who's all involved.
Courtney, do we know what next month's seminar is about?
Yes, sir. So these will be hosted the last Thursday of the month. So February's is on the 24th, and we are going to cover introduction to SBDCs, the Small Business Development Centers, which John, you had noted those a little bit in your presentation. And then DCO, the Department of Commerce and Economic Opportunity, going to overview services and product offerings that they have and potential programs that may be applicable for our businesses. March is going to be on the 31st to where we're going to cover apprenticeships. We're partnering with Lakeland College, Center for Business Industry, Baltimore there to discuss the local apprenticeship opportunities. They have the industrial maintenance program. We are talking with Lee Reese. He is a regional apprenticeship navigator on the western side of the state. That's going to detail what businesses should start preparing for if they want to start apprenticeship programs and what resources resources are out there. We're reaching out to a local employer that has had experience in apprenticeships in the past and getting that employer perspective. And then we're going to touch on the new Workforce Development Center in Mattoon Lift, and then touch on the ERCA, the Effingham Regional Career Academy as well. For April, we're planning to do something with GATA and PTAC. GATA is a pre-qualification process for that businesses would need to run to be able to qualify for state and federal grants, for public fundings, or for any type of procurement of contracts. And then the PTAC is a Procurement Technical Assistance Center. So if you do want to go down that road and try to pursue something from the public side, you're not alone. There is the possibility to have some assistance. In May, we're going to cover some training assistant programs. So the Workforce Innovation Opportunity Act for their incumbent worker, their on-the-job training, the youth work experience, and they have the adult work experience as well. And the ETIP program, the Employer Training Incentive Program, and various other training assistant programs. In June, it's still a little bit in the air. Mind you, we're still planning this thing out, and we hope to have more of a larger regional event sometime in early spring or mid-spring. And then and Kimberly, yes, the slides are going to be available on our website. So if you go to the ilbusinessnavigators.com, you can click for the webinars, the Access to Capital webinar, and be able to view the recording there. You'll be able to download the slides, and then we will send out links to all that as well as a follow-up from this webinar. So I think we have all the questions. If nobody has anything left, we want to extend a thank you, a very grateful thank you to our panelists today. Thank you for sharing this information and help educate us on the possible opportunities out there for access to capital. I want to thank the partners I have here with the Business Navigator Alliance and the team that we have. And thank you for attending today. Hope that you found it insightful and was able to obtain some value from it. With that, we're going to end today's program, and we hope to see everybody back in February.
Thank you, everybody. Have a great day.
Thank you.